Good morning, everyone, and welcome to the Ankerstar Wealth Morning Show. I'm your host, Allison Ankerstar, and today we'll be talking about U.S. China relations, Uber's earnings, and BP's earnings. But before we begin, as a reminder, this is a financial education presentation and should not be construed as personal financial advice. Full disclaimer information is available at ankerstarwealth.com. Good morning, Steve. U.S. China relations have become increasingly more intense lately. How could this affect the market?
Well, good morning, everyone. And, this is a particularly tricky problem. We studied this a lot in the military. Obviously, I was stationed in Alaska where all of our focus was on the Pacific and power projection. And you run into the problem specifically of the location of Taiwan in relation to China. Here's a map, a little over 100 miles or 100 miles-ish, depending on what point you're looking at. Off the China mainland, and we start thinking of the nearest U.S. forces. Obviously, the Navy could be positioned anywhere in the region, but as far as air power, mostly coming out of Japan or stationed right there in Taiwan. And if the problem is if it's on the ground in Taiwan, it would be really hard to stop China from taking over Taiwan. So, we have the Pelosi visit potentially happening and increased tensions. Overall, this would be terrible for the world and for the stock market because it puts everybody in a bad position. So, would it be a bad idea for Pelosi or any other U.S. official to go to Taiwan? Yes. Would it be a bad idea for China to take some actions because of any visit? Yes. Would it be a bad idea for us to respond with overwhelming force in that situation? Of course. I mean, all of those are bad scenarios. So really, the China-Taiwan situation has been sitting there, kind of at a standstill, kind of like the Korea situation, and that's good. That's stable when it's at a standstill. But if this would potentially torch something off over there are no good endings. And anything that turns into a major theater war is just terrible. And the tyranny of logistics for the U.S. to be able to fight a war on that front is just awful. That's all I can kind of really say about it, other than it's just not favorable for us to, the cost to defend the island is just terrible. So let's hope nothing happens over there. But certainly, how would it affect the markets? I think it would crater the markets. Wars over the long term are good for markets, is good for production, that sort of thing. But certainly, as we've seen with the Ukraine Russia situation, it's a headwind, right? So hopefully nothing happens with this, but we'll keep a close eye on it every day.
Next, Uber beat revenue this morning while missing earnings, and the stock is up 13%. Is ticker UBER a buy, sell, or hold?
Well, I'm not a big fan of the company. I think it's razor thin margins, and you have Lyft out there as well as some other ride sharing companies. You have the Boring Loop, the Tesla's underground. There's lots of competition. Maybe the iCar someday, or a permanent robo taxi running around. So I don't think it's a great long term investment. I think it's a fantastic idea. It's great for the world, and it's great for us as a consumer to be able to bring out our smartphone and get transportation instantly. All of that's fantastic. As far as the stock itself, I mean, if you look at here at the 24-hour chart, it looks amazing. Let's zoom out a little. Okay, yeah, back in January it was up here at 40, dropped all the way down to 20. So basically got cut in half, and now it's bouncing up from that. Why would it bounce so hard today on what's called kind of lukewarm, earnings? It's because of that revenue beat. So a lot of money coming in. They're still not making money, but a lot of money coming in. So obviously there's new initiatives that they have. So overall, I think if you are a big Uber fan, you could buy the stock here with some potential for it to go higher. However, if you are not really into this, it's not where I would put capital to work.
Last, BP announced a profit last night, increased their dividend by 10%. Is it time to buy BP?
Yeah, well, the kind of time to buy energy, that ship has sailed. And I hear people keep saying, "Hey, I wish I was more in energy." And it's like, well, no, you don't really. I mean, BP did, it said it posted a profit, so it's kind of a return to profitability from really 2020, where they chop their dividend, and now they're starting to build it back up. It used to pay a 5% plus dividend, then they cut it to zero. We'll go to the chart here. You can see this morning's move, but again, the 1 year chart. Sure, energy had its day back in June, early June, but peak oil prices, if you will, went all the way down. Went from 34 to down to 27. Now it's bouncing up to 30. When you look at the dividend, it's creeping back up north of 5% again with this raise. So is BP back? Probably. There's a lot to like here, but as far as an oil firm, I wouldn't own it directly. I would just take the XLE or some other whole exposure to the space if you're looking for exposure to energy. I don't think it's that attractive right now in relation to everything else. I think tech being beat up is a better place to put money to work. However, if you want a nice core holding out there of BP or the XLE to be able to get that dividend, I think it's lukewarm at best to be able to put money to work here.
Thank you, everyone, for your questions. Please submit your questions as a comment through social media or directly to our email at vipservices@ankerstarwealth.com. And don't forget to like and subscribe to get daily updates. That's all we have for today's show. I'm Allison Ankerstar, and we'll see you back here tomorrow.